Welcome to the Applying Elliott Wave Counts series. I'm your host, Jason Appel with ElliottWaveTrader.net. Each week, we present a strategic approach to trading an assortment of assets ranging from the U.S. equity indexes to the precious metals and more. We discuss market conditions and context on higher and lower time frames from the perspective of Elliott Wave analysis, and we identify advantageous trade setups. We hope that you enjoy this series and come check us out at ElliottWaveTrader.net. So you can see here on a zoomed out scale off of the 2009 low, we have been working on the cycle degree fifth wave. That's being counted as a primary 1, 2, and 3, and primary 4 into the 2020 low, and we can count this as a big primary fifth off the 2020 low. It's also possible, I think it's reasonable to look at this too from the perspective that our primary 3 topped at the 2022 high and primary 4 at the 2022 low. We want to understand that whether we call this the primary 4 or the intermediate 4, the move from the October 2022 low counts best as an ending diagonal. Wave 4 into the April low, and now working on the fifth wave. I wanted to present here in black also the possibility that we do continue up more directly in more extended fashion to complete this fifth wave here, and we can be in the C wave higher already. So that would look like this. Then from that May low, this would count like so. It'll make more sense when we look at this at a smaller degree. So as Avi's noted, we need to break resoundingly back below 6,200 to indicate some form of top in place. Avi has on his chart the possibility that we're topping in an A wave of a bigger fifth wave. The more bearish alternative would be that once we complete this move off the April low again, that we won't see a higher low, a corrective pullback to a higher low, but price will ultimately head back down below that April low in more direct fashion. Once we break that April low, that would give us an indication that we've probably completed this major bull market off the 2009 low and have a very large degree top in place. The key thing at this point is getting a sustained break below 6,200. If we are unable to break below 6,200, this is how we head up, as I'm showing here in the black count. The other possibility I would look at for trading downside would be if, let's say, we continue down into support, 6,300 or so, we touch the upper end of this, and then we get a corrective pullback. We may look at shorting a potential B wave. Again, the issue with shorting a B wave, as always, that we've discussed about is that B waves can and do extend sometimes, past their motive wave highs. We've seen many examples of this at all degrees inside of the indexes. For a good trade for a C wave to the downside, we can wait for some evidence of a B wave in place by getting an initial 5 down for a wave 1 of that C wave, and then shorting the wave 2 bounce. Now you have some parameters that because you have a clear invalidation point after the 5 down. If we get a 5 wave move into this region here, 62.15, let's say 62.10 to 62.50. We have the 0.382 retrace of the third wave there, of that black third wave at 62.37. But the upside trade from there then would be if we get a micro 5 up from there, that would then be our evidence that price is very likely going to turn up, higher into, September or October for this parentheses wave 5 of circle 3. And so we could wait for the micro 5 up and then buy the wave 2 pullback to play waves 3, 4, and 5 for the setup higher, et cetera, et cetera.